Hello, everyone, and welcome to another episode of the Financially Fit Podcast. I am your host, Andre Creighton. As always, I'm excited to be here with you all today, and we're going to make a shift in this podcast. I think up until this point, we have talked a lot about personal finance. We've weaved in some business stuff throughout that might help small business owners or startups, but I feel like we haven't delved into that enough. And candidly, I was on a trip about a week ago. I was traveling Detroit, meeting with other tech founders, meeting with VCs, and just hearing like kind of some of the struggles that founders had. It really brought me back to kind of my story as a founder and some of the struggles that we had early on, and also some of the successes that we had, right? And I really, God put it on my heart that I haven't been sharing enough of that. I haven't been sharing enough of providing guidance on some of the mistakes that we made, maybe some of the things that worked really well, and how that might be able to drive other people's businesses forward quicker, right? So I was on the plane, and I was just kind of, I would say, meditating or thinking about like, how can I do something different on this podcast? How can I really be that catalyst for small businesses that especially founders that have that grand vision. They're visionary, right? But maybe they don't have the funds to have a back office. Maybe they don't have the funds to have a marketing team. Maybe they're doing everything themselves, right? And they're trying to figure out how to scale. They're running lean. How can I provide them with things and strategies and ideologies that can help drive their business forward? So here we are. So this is my first stab at this. And, I work with business owners and founders every single day. A lot of my job today, I'm out in the marketplace. I work for a large CPA advisory firm. I lead our tech division and for outsourced accounting. And I'm meeting with founders. We're talking about those pain points. We're talking about how CLA and, you know, our firm can help really propel them forward, right? And I think that I always say that my superpower is that I've been in their shoes. I've been a founder, so I understand a lot of the pain points that they're having. I've also been on the other side where I've joined a tech company that was a little further along and have helped them exit to private equity, right? And now I'm in this role where also, I started my career in tax in the CPA firm, and now I'm on the outsourcing side of the firm. So I also understand how to navigate the complexities of a large CPA firm. Now, when I think about bringing all that together, I think there's real solutions that can be had for founders to really, really transform their business. So let's jump in. Today, we're going to talk about the business fitness test. And I think, really what it comes down to is, as I mentioned, I'm a CFO by trade. I've been a high school football coach, I've been a founder. I really enjoy that intersection of impact and also technical skills, right? So when I say impact and technical skills, I mean like I'm trained, to be a CFO. I'm trained to, whether it's financial strategy, whether it's capital raising, whether it's taxes, whatever it may be in the financial realm. And I'm not saying I know it all, but I do know a lot, right? And but I've also been a football coach at the high school level, right? So I understand how the grind can get tough when you're doing the grind every single day and you're doing it with purpose. And I want to be that catalyst to help you through that. So that's why we're here. So, really, I want you to understand when you think about your business fitness test, right? You wouldn't train for a marathon without being prepared, right? You wouldn't just go out and run the race. It takes weeks and months of training to prepare to run a marathon, right? Your business is no different, right? So why are you running a business without knowing your financials? And that is a thing that a lot of business owners uh, that are new don't focus enough on. And likely it's because it's uncomfortable. It's an uncomfortable space to look at your balance sheet, to look at your P&L, to look at your cash flow statement and be able to understand and decipher like what is the story that this is telling me, right? So that's why I'm here. And that's why I'm shifting this is because I know I have a duty and a purpose to really help individuals understand what they're looking at. So really, the business fitness test is a five-part assessment where, you know, we'll kind of talk through like where your business stands, and hopefully by the end of this, you'll have kind of the financial muscle you need to make the most of your work. So, and it's not going to be perfect. It's not going to happen overnight. Like it takes time. I've been in this space for over a decade, going on, gosh, almost 13 years now, right? So, like, it's a time for me to build the muscle that I have now. This didn't happen overnight. So, but I think through these podcasts that you will build the muscle that you need to be able to, really drive your business forward and make true impact and be able to see that vision that you had come together. So, why does this matter? You might be asking yourself that. Well, what we know is that 82% of small businesses fail because of cash flow issues. It's not because there's bad idea, the business is a bad idea. It's because they're bad at finances, and it's because they don't understand the finances, and then they don't understand uh, how those finances are driving my business and the KPIs and how all of that comes together to create a story, right? If you follow me on LinkedIn, like I always talk about as a founder, there's this balance of like your intuition, your gut, and then also information, right? You certainly need to use your instinct and your gut. And I will tell you during my time at Turn Signal, there's a lot of times that we use our instinct and gut, and sometimes we hit, sometimes we miss, right? I think when you go all in on that, it's like you're at the casino, right? And you're playing blackjack. You might get a good hand, you might get a bad hand, um, but that's where information comes in, and that's what we're talking about today is like how do we understand the information and how do we look at that and we put that side by side with our gut and our instincts, and in the middle of that is if those two things equal each other, right? Like what I'm feeling in my gut and the information also is telling me like what I'm feeling in my gut is right, we move with power, period. So the first one that we want to talk about is cash position and runway. This is probably one of the most important metrics, uh, I would say for any like small business or startup, and because it's really the foundation, right? If you don't have money, like it's really hard to run a business. Doesn't mean that you can't uh, start from scratch and grow it. It doesn't mean that if you run out of money that you can't figure out how to restart and do things differently, right? But it means like before we even get to that point, like how do we understand what our financials are telling us to be able to increase that runway, to invest the right amount of money back into the business to continue to grow, right? That will obviously increase that runway. And some of the other points that we're going to talk about are going to kind of lean back into that runway. And that's why I say that this is kind of the foundation. So the question you have to ask yourself is if sales stop today, how long could you stay open? This is something that we were always like hyper conservative with when we were with Turn Signal was, we had revenue coming in, early on it was very modest but we are super conservative with our projections. Um, from a cash flow standpoint, where, we pretend as if like, hey, no revenue is going to come in, what's the runway? Right. So it's not that the revenue was icing on the cake, but it was that like we were preparing that if we had if anything changed in the business, if there was seasonality, like that we could still be able to function, right? So the ultimate goal is like we want to have 3 to 6 months of runway at all times. Obviously, you'll hear VCs and they may say like we're looking for 12 to 24 months of runway, right? But the reality is like not every company is venture backable. Not every founder is able to get VC capital, and we know that while things are changing, that it's tough for some founders to be able to get funding, right? So we need to learn how to operate in a mindset that we're always going to have 3 to 6 months of runway, and we're going to try to make sure that we keep that as much as possible. So really, at the end of the day, like you're looking at what your cash is versus what your burn rate is, right? So if you take your burn rate is like all of your operational expenses, and you're going to take that and you're going to divide that by your cash. And that's just like super high level. We can get into like more granular things to understand runway and some of the accounts receivable and some of the accrual based stuff. But like if we're talking just on a strictly cash basis, like we want to understand what are our operational expenses and which we call our burn rate, and how much cash we have on hands. We divide that by the cash and we get to what our run rate is. So I think that is the foundation. And then once you kind of have a good handle on that, then we move on to like, what is our revenue consistency, right? And the question we have to ask ourselves is our income steady? Is it unpredictable? A lot of times when we first were starting at Turn Signal, our revenue was pretty unpredictable, right? Because we were having a lot of conversation, like we were trying to find our product market fit. We were redefining and constantly reinventing our go-to-market strategy and understanding who our customers, who our early customers were, like what's the probability that we could, when we looked at our pipeline, that we would this sale would actually come through, and what's the time horizon on that sale coming through, right? It's truly more of a science um, than it is an art. Like you need to truly understand your customer, right? And the goal is to at least have one reliable revenue stream, whether that's contracts, repeat customers, subscriptions, whatever your business model is. We want to have one reliable revenue stream. For us, what we found was our reliable revenue stream was going to businesses, right? Working, we tried to go the B2C route early on, and what we found was that like every individual in thinks differently about products and services, right? And then when you start to think about geography and like us moving across the country, like people in Minnesota don't live the same way that people do in California. People in California don't live the same way that people do in Texas. People in Texas don't live the same way that people do in New York, right? So as we scaled, we had to try to understand like how do people there like to live and how does our product fit into the way that those people like to live, right? So we found that going to businesses, it was more consistent, right? Like businesses that were focused on retention of their employees, businesses that were focused on being able to provide their employees with ancillary benefits. And that was where we started to find our reliable source, right? So you know the action for you all is I want you to review the last three to 6 months, and I want you to understand what your patterns are, right? I want you to understand, is there seasonality in your business? Is there, for us, it was because we were working with businesses, like a lot of times we were falling into that kind of cycle of when businesses were starting to do budgets, when businesses were starting to bring on actual benefits. So it created kind of a longer sales cycle. It created some seasonality in our business, and we had to understand that. And that's why the runway is so important because, if it takes 12 months for me to get a business on, and let's say that my runway is 6 months, well, how am I going to bring in cash to be able to extend my runway, right? To be able to see those deals come to fruition, right? So that could be, I'm taking on some debt. That could be I'm um, going to raise some capital. That could be I'm going to find other revenue streams that can be able to drive some of the growth that I need to be able to extend that run rate, right? So that's what I'm looking at when I'm thinking about revenue. The next thing is your debt load. So, the question you have to ask yourself is, are you carrying debt that's helping you grow, or are you carrying debt that's holding you back? And those are two very different things, right? Debt that is helping you grow is like, hey, I'm leveraging this debt. I have the ability to pay this back. When I look at my ratio, I look at my current assets and my current liabilities, like it's a 1.2 to 1 ratio, or 1.5 to 2 to 1 ratio, or 2 to 1 ratio, right? Meaning that like I have sufficient amount of cash to be able to pay my current liabilities, right? If it's less than 1, then we know that we have an issue, right? We know that there's likelihood that we could be in a position where we can't pay back our debts, at least in the short term. So we want to understand, is that debt working for us? We also want to understand, what is the interest rate on the debt, right? And am I how is that affecting my cash flow? How is that affecting my burn rate? Like, is it increasing my burn rate at a rate that is going to decrease my runway because I'm not getting as much revenue in the door as quickly as I'm having to pay out because I'm utilizing debt, right? The goal is we want healthy, we want to grow focused debt, not survival debt. And what I talked about around, like, is it holding you back? Like, that's survival debt, right? Having bad interest rates, having too much debt on the books, not having the current assets, so the cash, the accounts receivable. Maybe if you have hardware, it's inventory, right? And you're not being able to turn that inventory over quick enough to be able to generate revenue to pay down those debts. Like, we want to understand the health, right? uh, the action item for you all is, like, let's list all of our debt. Let's list the interest rates. Let's list the purpose, right? And if we're able to be in a position where we don't have to have debt on the books, don't have debt on the books, right? But I'm a firm believer that even as you're scaling and growing, and if you have a lot of meat left on the bone for your growth in your company, sometimes leveraging debt can be a good vehicle, because what we do know most times that debt is cheaper than equity, right? So giving up equity by taking on capital, right? I want to keep as much equity as possible and grow the business, because at the end of the day, I built this business thinking that potentially that, hey, I want to have an exit, right? And that exit is going to be what's going to generate enough cash for me personally that I can take that. And what we know is, once you're bit by the founder bug, you're always thinking of new ideas. So I can take that money and then build the next thing. And now I can do it a little differently, because now I have money, and I can bootstrap this business, and not maybe have to take on venture capital as much or as quickly as I did the first time. Or maybe I don't have to take debt on as quickly as I did. I can really truly bootstrap this thing and grow value for myself. The next one is, like, we want to do a profitability check. So, are you actually making money? Are you actually making money? There's a lot of great businesses out here. There's even businesses that have IPO'd that are still losing a lot of money. And that's okay, right? That's okay. Because maybe they see a way that maybe they're bringing in a lot of data, right? And they see a way to capitalize on selling that data later down the line, right? So there's other ways to create value in the business. But at the end of the day, we want to know, are we actually making profit? Do we have ability to get to a point where we're making profit? The goal is, we want to have positive profit margin. We want to target 10 to 20%. If we're in that 10 to 20%, we're doing pretty good. Obviously anything above that is great. But if we're doing 10 to 20% from a profit margin standpoint, like, the business is doing pretty good. I think in order to get to a point where you're profitable, you have to understand what your break even is. And what we know is, like, break even can be a moving target, because as we're growing the business, we're likely increasing operational expenses. Maybe we're increasing R&D expense and dev development. And now our burn rate is a lot higher than it was, and maybe that fluctuates some months because, hey, we had to invest more in tech, and now we've gotten it finished, and now our burn rate is 50K less than what it was the prior month, and that's going to be the go forward, right? So we want to understand how that's a moving target. The action is, we want to understand what our revenue is, what our expenses are, and that really will equal what your profits are, right? But then we wanted to be able to take that profit and divide that by our revenue, and that's where we're going to understand what our margins are, right? So really being able to understand our unit economics is so important in our journey as a founder or as a small business owner. The last one that I want to touch on is owner pay. And I always hear that a lot of founders say, like, I don't pay myself, like, I don't take a salary. And sometimes you have to do that to be able to survive, right? Especially if you're, but that's why it's important to look at that runway, because if you're less than 3 to 6 months, then maybe you aren't taking a salary. If you're more than 3 to 6 months, maybe you can start to pay yourself something smaller, and have yourself be a part of the business, right? From an expense standpoint. The goal is to build owner pay into your expenses, even if it's modest. We want to build that into our projections. We want to build that into our expenses, because we want it to be vivid. We want that to be something that uh, is a part of our projections that we're being planful for, and not something that is uh, being done, ad hoc, or something that we're just doing, every once in a while, and it's a surprise to the business, right? So let's the action is, let's set a monthly, owner's draw or salary or whatever it is. Maybe you're a W-2 employee, but we want to make sure that that's built into our company. So the things I want you to think about coming out of this episode is, on a scale of 1 to 10, how financially fit is your business in each area? Really dig deep into this. If you could do these 5 things and really get an understanding of how financially fit you are, you're going to be in a great position with your business. And you're going to be a lot further ahead than a lot of other founders or small businesses. So I think that's important. And I think also, like, understanding, like, what's your score, like, that's really your starting point. Like, where are my pain points? Where am I struggling? Do I have too much debt? Do I not see a vision to be able to get to profitability in the next year or two? Am I not paying myself? Is my runway less than 3 to 6 months? Is there a lot of seasonality in our revenue, right? Is it not consistent? Uh, you really want to hone in on those things, because the reality is, if you don't know what the issues are, you can't fix the issues, right? And some of that means that you have to put your ego aside, and you have to be honest with yourself. You have to have these honest conversations with yourself. So, I just want to. This is a fun one, and I'm looking forward to continuing to talk about these things and continuing to build off of what we talked about today, to be able to provide you all with the keys and tools to be able to really drive your business forward. This isn't not about being perfect. It's about progress. So, you've really taken the first step if you're listening to this podcast. But I want you to give yourself some grace, because it's not about being perfect. Let's think about progress, right? Um, one of my co-founders, Jazz, like, he always used to say, don't let perfection get in front of progress. And I think that that's so powerful, right? Because oftentimes we want to be perfect, but oftentimes we don't understand and appreciate the progress and celebrate those wins as they come. So next week, we're going to talk a little bit about bootstrapping. So, bootstrapping like a pro, how to grow without drowning into debt. I think this is going to be another good one for those that are in a position of thinking about, hey, do I put money into this? Do I put more of my money into this business? Do I go out and get venture capital money? Do I find a way to leverage debt? This is going to be one where we really dive into, like, the intricacies of, like, how do you bootstrap a company, and what makes sense, right? So if you found this helpful, share it with a fellow business owner, subscribe so you don't miss the rest of the series. Like, I really enjoy, talking to you all. Like, this truly is one of the highlights of my week, when I get a chance to really regurgitate, I would say, all the things that are going through my brain, all the things that I'm seeing during the week as I'm working with founders here in the technology space in Minneapolis or across the country. But as I always say, it's not about how much money you make. The power is in how much money you keep. I am your host, Andre Creighton. Thank you so much for being here with me today. I look forward to seeing you all in the next episode of the Financially Fit Podcast.
You know Shaletta makes you laugh, but did you know Shaletta Brundage can also make you think and boost your business? Media personality, activist, and comedian Shaletta Brundage founded Shaletta Makes Me Laugh to celebrate and share the best of Black culture. It's a podcasting platform. You can download 10 weekly podcasts hosted by African American subject experts at ShalettaMakesMeLaugh.com or wherever you find your favorite podcasts. ShalettaMakesMeLaugh.com is also a production house, creating broadcast quality commercial content. And Shaletta and her team of storytellers create powerful promotional campaigns to get businesses the brand awareness they're looking for. Some of Minnesota's top businesses trust Shaletta, and you can too. Get out the word about your events and products and get in front of communities of color with ShalettaMakesMeLaugh.com. She's got the power to help your business.
To keep my home running smooth, I count on Xfinity Internet. With 99.9% reliability, we're all online at once. No slowdowns. The Xfinity app lets me manage our Wi-Fi and keep things secure. Xfinity makes it easy.